I'm going to actually talk a little bit about the meme boys and meme stocks and what I did today in my account. So let's look at that. You guys can see the screen, right? So on the upper left-hand corner, that's GameStop, right? The meme boys are back. GameStop. So you guys are seeing my screen, which is good. I'm gonna show you guys what happened to GameStop. So this is GameStop on a daily chart, daily basis, right? Do you guys see on the way on the right hand side? Do you guys see that huge bar, 24 to 38? Okay, well, Roaring Kitty, who was GameStop's huge sponsor in 2020 during the pandemic days, showed up on Twitter and said, "I'm watching." And sure enough, by just for him to say that, the stock goes from, I don't know, gaps up at 25 and goes to 38, and now it's right about 29.40, 29. You guys can see the live price change. And this is what GameStop has done on a 1-minute basis today, right? There were so many halts. Stock for volatility was halted. It's going sideways now. And I'm going to explain to you why this is happening, by the way. You guys need to understand the fundamentals behind this and what I did. And I'll go through the 4 or 5 stocks that I kind of talked about on Friday. Here's the daily chart, right? Okay, so let's talk a little bit about something called a gamma squeeze. A gamma squeeze. You guys heard of it? Did you guys get the option books yet? Okay, so GameStop is a company that's garbage. Okay, so whoever's watching on the Reddit boys or the meme boys, they'll probably come after me. I go like, hey, company's garbage. It's worthless. It's a bankrupt company, right? How is this happening then? Well, there's many reasons that this happens. It happened during the pandemic, and it's happening to a lesser degree now. And this is, by the way, the inverse version of the falling knife. This is the flying knife. Don't do that either. Don't try to catch this either. You're going to get hurt. However, here's the deal. GameStop is a company that's heavily shorted. Shorting means a lot of institutions, a lot of hedge funds have bet against this company, meaning they're hoping or betting that this company is worthless. I kind of agree with them. Okay. However, there are things called short squeezes, and this stock. Now, the way you short things is you sell it without owning it. How do you do that? You have to borrow shares to sell it. And when the price goes down, you make money. Okay. Not as simple to understand. Those are coming up. Net worth. Those are definitely coming up. I'll answer that question. Actually, you can yourself go to the Fred, FRED, right? St. Louis Fed, and see all those charts. They're all in there. Yes, they do. Actually, that's the only thing that's holding the economy together, because they all refinance when the rates were 3%. But we'll talk about that in the next few shows. Good question, though. So anyway, GameStop, back to GameStop. So stock, gets shorted heavily and gets squeezed heavily. Squeeze meaning when you short something, you sell it first, buy it back later. Well, now a lot of people have to buy it back because they have losses. Okay. So quite simply, if you buy something at 1, sell it at 2, you made 100%. If you sell something at 2 first without having it, borrowing it, and buy it back at 1, you made 50%. Shorting works a lot. It creates liquidity. It brings companies into justice that are frauds, okay? Like Enron, like WorldCom. We've seen many, many, many. Or, Theranos with Elizabeth Holmes, right? All these people, right? Shorting works, but you have to be really careful because the risks are unlimited, because it could go to forever. It could go up forever, like it did kind of today, right? So on GameStop, they trade options. We talked about options. Remember, expiration date, premium, strike price, call options, put options. Well, what happens in these cases is that all these meme boys, they get together. This is the equalization of Wall Street. This is what I've seen over the last 30 years, which I love, right? A lot more democratized now. Small people have the power to move things now, and this is what's happening. It happened in a massive degree. Like GameStop went from $5 to $400 during the pandemic. Now, is it going to happen again? I don't know to that degree, but it definitely happened today. Stock was like, I don't know, single digits. Now it's at 30. Well, could it go to 60 tomorrow? Could it go to 90 the next day? Absolutely could. Should you participate? If you have money to blow, to put on fire, and you're not going to be sorry if you lost all of it, yeah, you can trade some options, which I did. I will show you that in a minute. But now we have to pay attention to options, right? So what happens is that a lot of people buy call options, all these meme boys. They buy the call options. What was a call option? Remember? Call option was the right to buy a stock at a certain price at a certain time, expiration date and strike price. Okay, remember that? So what they do is called OTM, out of the money. So when the stock is 10, they went and bought hundreds of thousands of call options at 20 strike price, 30 strike price. Okay, if the expiration date comes and stock is under 20 or 30, the strike price, those will expire worthless. They will lose everything, right? However, in the meantime, when this happens, right, now there's a seller of these options, just like there's a buyer and there's a seller. What the sellers most of the time are going to be market makers. Market makers have to sell it. They have to create a market for these things, okay? Now I'm going to show you guys the option chain, and this is called a gamma squeeze, and this is what's happening. And so remember, I talked about option chain on Monday. Here's my option chain on GameStop. You guys can see this, right? It gives me all the options that are available. The top strike price is 40, okay? I'm going to go show you guys options expiring this Friday, and I talked to you guys about something called implied volatility. Now, you guys will see the difference, okay? Here's the main option chain on GameStop, okay? On the right-hand side where my cursor is, you guys see IV? That's not an IV you put in your arm at the hospital. That's short for implied volatility. There is the last bid ask volume open interest, right? Look what is happening when the open interest on an option is, look at the 34, and this Friday's May options go all the way up to 34. Look at the open interest where my cursor is. Open interest is existing positions, 16,600. So far, it's only 11 a.m. in West Coast. These options traded 60,000. Now think about this. Each option is equal to 100 shares. 60,000 times 100 just in one strike price. This option is equalizing 6 million shares of GameStop that somebody is willing to buy by paying this kind of premium in 4 days at $34, and stock is 30, right? And look at the high low on this option. Here it is. This option in the morning, the low end was $2, and the high end, it was $12.88. Think about it. That's a 6x. And stock didn't move 6x, right? But this is the power of options, okay? Now, look at all these columns. Look at how many thousands or hundreds of thousands of options are these trading. So what happens is that the buyers come in, buy these options, pay the premium. Is it going to expire worthless? Most likely. Most likely. But what happens is that the market makers sold them options. They raised the implied volatility through the roof, as you guys can see. Look at it. It's 453%. Normal implied volatility on GameStop is about 150%. And I'm going to just prove that to you guys by putting the 39-day June options, June 21st expiration options. Look at those options. Here's the option chain, right? They are trading a lot less, but do you see what happened to IV? It got cut in half. The further you go out, the lower the IV is going to be. Implied volatility is going to be, right? But they're still trading thousands or hundreds of thousands. And then GameStop has options expiring next Friday, okay? Look at the numbers on these things, right? Open interest, 800, 6,500 of those traded. But what the biggest gambling that's happening right now is in the weekly expirations, okay? These are all going to expire on Friday. If you look at the volume on these options, right, especially the out of the money ones, out of the money meaning stock has to go up a lot for people to make money, it's trading hundreds of thousands of options. So somebody sold these. Well, if the stock keeps going higher, this is basically like a domino effect. The more options they buy, somebody's selling it, they have to hedge themselves. That's called hedging the delta. The market makers have to hedge themselves. How do they hedge themselves? By buying the underlying equity. That's the only way they can hedge themselves. Now, add to that the short position that exists. GameStop has 300 million shares outstanding. Okay, 70 million of that is sold short. Literally 25% of the company is sold short. The only way you can cover your short position is buying the stock back. And what happens is that a lot of brokerage houses forcefully buy this back without asking this, the short seller, right? So there is all this fire that's just building, right? Between the options, the gamma squeeze, and the short sellers. And that's what happens when stocks like GameStop show up. And now I'm going to show you guys to finish and answer questions for 5 minutes. This is my account, what I traded on GameStop today. Full transparency, no bullshit in this channel. This is my realized gains and losses for today. And here they are. I'm having a good day. I have other positions. I was short Facebook. I took my losses. But remember, I told you guys about RILY, right? I was long options. I said I'm long the stock. I bought it 30.31. Today hit 36. So I took my profits. I probably booked about, I don't know, $5,000 in profits on that one. And here's my GameStop trade. This literally took, you guys can see the time. I'm moving the cursor. 11:38 Eastern time, 11:39, 11:41. I bought 15 calls just to show you guys how fast these things move and how much you can make or lose, right? I bought 15 calls, meaning 1,500 shares worth. And I sold it 8 minutes, 38, no. So 28 minutes later, less than half hour later, I sold them. And I realized, this is realized, not unrealized. This is in my pocket. I ended up making, I don't know, 1,500, about 2,300, 2,250, right? And on RILY, I still have positions, but I'm, taking my profits, and I'm taking my losses on Facebook. So when you're wrong, you're wrong. I still have a short position on Facebook, by the way. But if it keeps going against me, I will. This is called risk management. Okay. But if you look at just the Facebook and the RILY position, okay, on RILY 2,500, 3,600, 45, about $5,500 worth of profits, and taking about $3,000 worth of losses. Okay, so add the 20 to 2,500, I'm up $5,000 in my trading account. Right, I'm done already. That's why I'm doing the show. Will I get involved in GameStop? Probably I will. What will I do? I will most likely sell premium on that, but that's a falling knife going upwards, and you don't want to mess with that.